Okay, Shaun, welcome back to Face. How are you?
Yeah, good morning. I believe Anthony is also with us, but I think he's waiting to be invited as a panelist, maybe.
Okay, Anthony, if you're
I am
still here
doing I'm
still,
doing that right now. I'm doing that right now,
thank you.
promoting.
You're
There
like
you
the
go.
Wizard of Oz. You're like the guy behind the curtain. So, I didn't even know you were here. And then all of a sudden, who wants to talk to the wizard?
Yeah.
So, anyway, Shaun and Anthony are here. Shaun, what's new? You think we have a top in the market here? And war drums, wars and rumors of wars. What are you thinking with these
Yeah,
markets?
well,
Anthony's here too now. Thank you, Stel.
excellent.
Okay,
Yeah, it's been a
guys, go ahead.
yeah, tricky, very tricky market. And of course, our focus at geeksoffinance.com is more on looking at gamma and market positioning, which has really kind of changed my way of looking at things. I look at charts a little bit less,
All right.
look at the
You
positioning a little
wanna
more, but
do you want to show what you look at that's changed you? Share your screen.
well, let me, Anthony, do you have anything pulled up immediately?
Yeah, I can share my screen. Hello, everybody.
Hi, Anthony. Welcome back.
Yeah, nice to be here again.
Yeah, so hope that the spring is treating you guys okay. So there we go. We have
Yeah.
the gamma exposure here. Okay.
Yeah,
So
it's we noticed that, gamma exposure, which is something we track very closely here. When gamma exposure is positive, you typically have lower volatility in the market, volatility compression. We call it buy the dip environments, which is basically what we saw from November up until about early April, April 1st, April 2nd. We were in a positive gamma environment, basically, 95, 99% of the time. Well, gamma flipped negative, and that's what I'm showing here on my screen. We have our gauges here, and once we cross to the left side of the middle of this gauge here on the left, this is showing that we're flipping into a negative gamma exposure environment.
but
And we
not there
saw that
yet.
happen
Not
on
you.
April 1st, and we've
Not there
basically
yet.
been in negative gamma
Hello.
since then.
Hello. Hello.
Can you hear me?
I hear you, Dale.
Okay. Well, obviously he can't. So I
I hear you.
wanted to. Okay, I wanted to ask a question. So we're entering negative gamma, but you're saying it needs to cross the halfway point. So we have to get to what is that? Zero up there at the top, or uh,
Oh,
past
good. Yeah,
there,
good question.
or
No, we've
for it
we've
to be
already
actionable?
Yeah, we've already crossed it. We've crossed
Oh,
into negative gamma territory early in April.
okay. But on the when you were in positive gamma, do you shift your buy the dips to sell the rips at what point on the gauge? Because the one on the right went all the way, completed that whole circle. So you start, like right now, you're probably selling rips, right? Once that
Yeah,
starts to
exactly.
turn, you don't have to wait for more confirmation or for it to become more reinforced to grow, for the number to grow, right?
Correct. Yes. And yeah, the gauge on the right is highlighting implied volatility,
Uh,
which we factor in gamma exposure into implied volatility to come up with a custom indicator here. So this is basically looking at on a relative basis for the past year. What is implied volatility now? So we're at the highest implied volatility that we've been at in the last 52 weeks. So this to me says we're basically seeing a significant shift in the market. And so that combined with negative gamma exposure has been our indicator to, start, like you said, selling rips, shorting the market, leaning negative.
okay. Um, and does this apply across the board, or is it sector? Do you do sector analysis, relative
Yeah, we do.
strength?
Yeah, good question. We're looking right here. This is looking at the SPY. So this is,
Okay.
broad market ETF. We can look at specific tickers as well and do the same analysis.
Okay. All right. So,
Shaun, you got anything to add to that? Any tickers you're looking at, Shaun, that you want to mention?
Well, I've enjoyed the we have a process of basically introducing ideas to our Discord members in the form of an educational portfolio, and that's been interesting for me to watch, especially Anthony. I'm just kind of new at the at structuring the trades the way that he is, but we've been using anything from butterflies to call and debit, call and put, debit and credit spreads. And so those combination ideas, I mean, we have like a butterfly on TLT right now. And then we just closed out a long Disney position, but we were also short Apple. So there's a combination of long and short ideas that we're finding that are both sector specific and, some of the broader indices.
okay.
So
What else
and
is on the menu?
been we've had like 3 months of 20% plus, including month to date in April, with kind of with the sum total of those ideas, which has been pretty nice to see.
Okay. So you do pairs trades and you do a lot of option strategies.
Yeah, exactly.
Well, why don't you explain what a butterfly is to our audience?
Yeah, I'll let
Butterfly
Anthony
spread.
I think Anthony does a better job explaining it, even though I could do it if I.
Okay, go ahead.
Sure. Yeah, so I mean, butterfly is a three-legged option structure where you are selling the middle contracts and buying the wings. So, for example, looking here at this SPY gamma exposure chart, if we wanted to target the 500 strike, which is where we see this big negative gamma exposure concentration, we actually, tagged that or got close to tagging that yesterday. If we felt like, hey, market's going to hang around this 500 level for the next few days, we could throw on a butterfly trade. We could potentially sell for example, the 500 puts, buy the 498 or 495 puts, which is one of the wings. And then the other side of the butterfly structure would be buying an upside put at 505. And so what you're basically saying is you're collecting premium if the SPY stays around this 500 gamma exposure concentration level. And so it kind of helps you narrow in your premium collection at a specific strike. And so we use a lot of butterflies if we think that price is going to like target a specific strike, within a short time frame, could be anywhere from 1 to 10 days. And we'll do those like weekly butterfly strategies.
Okay, so what are we targeting now based on your work? What strike?
So right now we've our initial target was 500, which has been hit, and we actually closed out we actually had a SPY put debit spread. So we had bought the 510 puts. This was early in April. We bought the 510 puts and we sold the 480 puts expiring in the May 17th expiration. We closed out half of that position yesterday, just because we kind of hit our initial tag here at 500. But the interesting thing is we're now starting to see gamma exposure growing. These bars here were not here in the last week as prominently, and we're starting to see this growing at 495 and 490.
Okay, interesting.
So that's kind of signaling to us that there is, most of the short interest in the market was focused at the 500 strike, but now we're starting to see more interest coming in even lower. So this is signaling to us that probabilities are increasing for a continued move lower. So that's why we're keeping half of our SPY put debit spread position on. I'd like to see over the next couple of weeks. I mean, I think we may have a short-term bounce, but at some point, maybe just as a relief rally, 1-2%, but we would view that as an opportunity to short the market again, potentially for the next leg down, which could be between 490 and 495 as these gamma exposure concentrations grow down here, these negative gamma exposure concentrations.
So a debit spread, you bought closer to the money put and sold a further out of the money put, correct?
That's correct, yes.
So are those also called risk reversal trades?
No, that's not really it's almost just like an outright bearish bet. So it's basically you're saying like if you're buying the 5-10 puts, you're basically saying I think the market or I think the stock is going to be below 510 before expiration. So it's a directional bet.
Okay, and but selling the 480 reduced your cost and limits your upside to 4,800. I mean, your profit potential.
Exactly. So we're basically saying, hey, we don't, we want to reduce our cost, and we don't think that the market is at this point is going to go lower than 480 in the next month. So we're it's a little bit of a trade-off there, how much we're paying for that put debit spread, and we're capping our maximum gains if the market does continue to go lower.
Okay, nice trading.
Yeah, an interesting thing too is that sometimes on SPX and SPY, you'll see different gamma setups. Not completely opposite, but for instance, SPX is more neutral. It is negative technically, but it's but gamma's not as negative as SPY. And as Anthony was pointing out, though, we're still seeing a negative shift. We had a big gamma cluster for Friday that was at 5,300. Well, that shifted, and now the largest positive gamma cluster is at 5,100. And so that might be a rebound target if the market can find its legs in the next 24 hours. But that may also, there's no guarantee we'll get there, obviously, because we do have these growing negative gamma clusters as well. But they do differ sometimes.
I've got the SPX pulled up here, and you can see there's a little bit of a difference. When we were looking at SPY, the biggest negative cluster was at 500, but when we look at SPX, we see a very large cluster at 4,800 as well as 4,950 and 4,900. So the structure is different on SPX, and so it's good to kind of compare these because you've got different market players in these different products here, like in the options market. So they're making different bets for different reasons, and it's just always good to compare what the gamma exposure data looks like in between. And so this to me is basically suggesting there may be more institutional players that have further downside projections, and they're making those bets here in the options market on SPX. So we didn't really see a huge negative gamma exposure on SPY at 480, but we do see a large negative gamma exposure at the 4,800 strike on SPX. So that could be, a slight difference in institutional positioning potentially and retail positioning in the SPY, for example.
Okay, because I would bet that there's a huge volume difference in the options being much larger on SPY than on the SPX futures.
Yeah, it is larger, but it's still, I guess it's just a difference in who's playing it, because it takes quite a bit more effort, I would say, in the SPX to put these type of positions on, especially if you're hedging in any way with futures or any of these other products related to the index itself.
Bigger spreads, not as liquid in SPX options.
Yeah.
Okay. Yeah. All righty. And this is mainly what you guys cover is mainly the SPY and SPX. Any other markets that you're focused on? It's okay. I sometimes people focus on too many things. So, what is it besides SPY trading? Do you do anything else?
Yeah, we tend to focus on the US-based tickers because that's where we're confident that our data sources are actually telling us accurate gamma levels. and we haven't quite cracked that code with some of the international markets, but we do have some.
TLT? How about TLT? Do you guys, track a yield instrument or a bond?
Yeah, that's
Okay.
interesting because I actually just had TLT pulled up. I could share that screen because we have a trade on right now with TLT. So it has a large negative gamma concentration at 90, which is above the current price. But we have a butterfly, a long call butterfly, where we have the 89, 90, 91. So we're basically betting that TLT hugs that 90 level. And we just initiated this trade this week, and we went from being down a couple of days ago to now we're up 50%. But it's such a small trade for us. We try to asymmetrically structure these trades so that if we lose the entire premium, it's not going to ruin our $10,000 educational portfolio. That's kind of what we're allowing everyone to track. But if it works out, it would definitely add to the total mix. So, yeah, so we do cover those, and it does have negative gamma. It is pretty close to the neutral. It's not deeply negative, but it is negative currently. So.
Yeah, I pulled it up here on the dashboard. Can you guys see that?
Yeah, we got it.
Okay, great. Yeah, we cover a number of different tickers. I'm glad you brought up the TLT because that's actually, as Shaun mentioned, that's actually a position we have on. That's expiring tomorrow, that butterfly position, but we're targeting this 90 strike. So even though it's not at 90 yet, we've already, as Shaun mentioned, collected 50% return on that initial 89, 90, 91 butterfly spread that we put on. But there's a number of tickers. We basically cover around 150 tickers, combination of ETFs and large mega cap stocks, S&P 500. The most popular names that have liquid options market that you can trade a number of different strategies on, and you can analyze the gamma exposure on those very easily as well. So NVIDIA is another one that we're looking at. NVIDIA is always a tricky one to trade because there's so many people playing the options market. For us, it's been hard to get, especially the last couple of months, it's been hard to get an edge in any of this position because the options market has just been so rich in premium because so many people are playing it. But it's starting to look interesting here for, if the market has any kind of bounce. We think NVIDIA could be targeting somewhere in this 880 to 900 range. So it's not something I would make a large bet on, but if I wanted to capture a potential bounce, NVIDIA is an interesting way to play it because we see here there's large gamma exposure at the 880 strike and the 900 strike. So we actually put a trade on that it's actually a call debit spread, buying the 890 calls, selling the 900 calls. It's a very small position for us, but as Shaun mentioned, we like to put these asymmetric risk reward strategies on. So, low risk up front to us, but if it pays off, we'll get like 3 or 4x on our investment. So this is one of those things that's kind of like, hey, if the market does have a rally, an unexpected rally that's larger than what we're thinking, this will help, give us an opportunity to profit in that scenario. So, and we use gamma exposure to make those decisions. So we see these positive gamma exposure bars here popping up at the 880 and 900 strikes. And so that's informing that decision to say like, hey, this could be an opportunity here.
Okay.
Yeah, we just did that yesterday, actually.
So I see the purple, bar. But how do you identify the strikes just using this?
Yeah, it's down here on the x-axis, and if you just hover over, I know it's a little tough to see probably on my screen, but yeah, it tells you it's the 880, and you can see it on our other tab as well. We present it. This is a horizontal visualization of the gamma exposure, and we're just looking at absolutes just to make it easier. So we just want to say hey, compared to the price action, where is everybody focused? Forget about whether if gamma is positive or negative for a second, but where is everybody focusing? What strike price is everyone focusing at? We can see that against the price action of the stock. So Nvidia's trading down here, 840, but we can clearly see there's a lot of focus here at the 880 and 900 strikes by looking at these bars. So just a different way to visualize it. I think it
Yeah.
helps, to see it in various formats, so you can get a better idea of what's happening.
Huge volatility in precious metals. Anything that you're trading that is related to what's happening in gold and silver, or the miners, or it's really in the last months historic moves. So
Yeah. Yeah, we
overnight
actually had a
moves are
GLD
crazy.
position.
Huh?
We had it. Sorry to interrupt, Dale. Yeah, we had a GLD position that we closed out with substantial profits,
Nice.
and we do cover some of the other metals complex as well. But yeah, it looks like gold. It's been very positive. I mean, this gamma cluster at 220 for GLD is the largest one that's out there, and we're kind of in a dealer cluster zone where we might see some consolidation here. So
that's what it's been doing, it's chopping around since that spike. So
yeah.
do you try and capture volatility? I'm sure they've pumped those options. Maybe it's already come out. The volatility has come out of them.
Yeah, we do try to capture volatility when we see a setup like that, and we'll use, like we mentioned, maybe butterflies if we think the price is going to hover around the same level. We'll use iron condors as well, and we've also put on some double diagonals, which is essentially is like very similar to a calendar spread.
Okay.
And it's just a way to capture that premium if you believe that price is going to hover within a certain range. On GLD, it's interesting because we saw that big spike up from the 190 area all the way up to 220 over the last, I mean, what's been like 3 or 4 weeks. And so we caught about $10 of that move with some call debit spreads that we put on. I think we traded GLD twice. And yeah, it's kind of been hovering, around this 220. The volatility has been surprising. You can see implied volatility is at the 60% level, meaning it's 60%. It's higher than 60% of the time over the past 52 weeks. So definitely seeing more interest, more trading in GLD. And
in a long time.
Yeah. It's interesting because it looks like market participants, at least according to Gamma Exposure, they're still focused on this 220 level, but there's quite a bit of interest growing at the 230 level as well. So this consolidation period potentially could give rise to another leg higher, in the 5% realm. So that's something we've got our eye on.
Okay. Well, Anthony, I could tell, you have great knowledge. You have to have it to put on things like iron condors and double diagonals. And I was curious because I know some people pay a lot of attention to option sweeps for directions, for directionality, where the wise guys are putting on big bets. Is that important in your work, watching option sweeps?
Yeah, and we kind of are able to capture some of that data
In your gamma stuff.
Yes, yes. So we actually
Okay.
have a 3D gamma surface model, which just helps us to drill down a little more granularly. Here, if you see my screen, this basically is showing us this three-dimensional visualization shows us the time element. So if we see, there's a lot of concentration, let's say at the 220 strike, Well, when does that concentration, when do those options expire? Like, where's the bulk? What expiration is the bulk of those
Tomorrow.
options focused on? So yeah, we see April 19th
Yeah.
and we see May 17th as well. There's another, if we just turn it here, we can see May 17th has a lot of expiration at 2:20 and at 2:30. So this looks to me like there's continuation for the next 3 or 4 weeks of people expecting price to trade between 2:20 and 2:30.
Okay.
Yeah, and so that just goes as people are adding positions to their portfolios. This kind of helps us to see where market participants are adding. So right now, market participants are adding GLD calls,
Yeah.
and that could be
2,300.
depending, could be long calls, could be short calls, and then we try to ascertain, the net gamma exposure on that based on that analysis.
All right. Well, guys, great presentation. I don't get a lot of people talking about options here, and in an intricate way, like you guys, really very amazing work, in my very accurate and humble opinion. So, how do people follow you? I know that Shaun and you have different X handles. Where do you want people to go if they want to, get involved with you?
Yeah, we do have a Twitter account. I would almost say maybe joining our free Discord channel, which we share a lot of info there for free, and we also have a newsletter that we author on the weeknights. But if you go to our website, there's an icon at the top left where you can get into that Discord, and actually for a full week you have access to all the same channels that our premium subscribers have access to. And even after that, you can remain in the general chat. If you decide you don't want to join, which is fine, we still share a lot of free stuff, and we have a lot of good, kind of a good core group of people there that are also knowledgeable. And so it's been humbling for me to see some of the success of people in the group, and also to get some of the good questions and other ideas that people share. So that's what I would say. What about you, Anthony? Anything else you wanted to add?
Yeah, no, I think that's absolutely right. Discord is kind of our central hub. There's a lot of great traders in there, who have a lot of ideas. So we're all bouncing trade ideas off of each other. We're talking about the market. Really good core group of members and guests, who are sharing ideas. So we'd love to have you guys join us. Geeksoffinance.com's got all that information. You can link to our Discord or any of our social media just up here on the top left, and follow us, and yeah, check it out. We've also got, for our members, we actually have a free education course on gamma exposure, options trading, options strategy, portfolio management. It's a 5-hour course. It's free. It's included with all monthly memberships. So if that's something you're interested in, we highly recommend, like, all of our members to take the course, because it's like really gives you a foundation for how the methodology works.
All right, guys. So Shaun and Anthony, people know how to get a hold of you guys. A lot of people enjoyed having you here. I'll say thank you to you now for coming in and sharing your work with us. And
thanks for having us.
Yeah, I hope
thanks,
you guys.
Dale.
Yeah, I hope you guys have a great spring trading season, and we'll talk again in the summer.
Hey, sounds great.
What do you think? Huh? Should I bring these guys back? Come on, Laura. Let's take a vote. I say yes. What do you guys think? Huh?
Yeah, we're up for
Laura says interesting. Okay. All right. So Laura rules. Tom says yes. So you're in.
All right.
Another great interview. This is my 1 millionth interview that I'm celebrating today. You guys are
really?
my 1 millionth interview today.
Wow. Let's see. Let me do the math on that.
I'm kidding. But thousands. Anyway, I'm only a thousandaire. I'm not a millionaire. I'm a thousandaire. So
The best way to become 1,000aire is to start as a millionaire.
Yeah, I've avoided that. So really, guys, nice work, and I'll get a hold of you guys and we'll set up a day down the road. Good hunting. I'm pulling for you and all your clients, and that's it. Although people think I did 1,000,000 interviews. Anyway, okay. Feels like it. Anyway, guys, good luck. Good hunting. So my Trading Warrior brothers, Anthony and Shaun, check them out. Remember, don't just count your pips or your strangles or your debit or credit spreads. Count your blessings, and we'll wrap up the week tomorrow. Adios, everyone, and thank you, guys.
Thanks, Dale.
All right.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.